AMC Entertainment and the streaming company Vudu just entered into a partnership. You're not going to see this talked about from financial media outlets. There's literally been zero word of this. But maybe that helps to explain why AMC stock is up. So you're getting some very interesting breaking news that is happening today. Now, AMC Entertainment and Vudu has partnered, and AMC is no longer doing their AMC On Demand program. This was a program where you could go and rent the latest movies that were in theaters, just left theaters, or a wide selection of non-theatrical movies. So this is interesting. And AMC stock is up almost 3% on the day. Maybe this is good news, but go figure, financial media is not going to talk about this. You literally have to see this on news wires or you're not going to see it, because these are not articles that are coming up if you just try to search what's happening with AMC or breaking news or a simple search. They're not talking about this. Probably for their own interest. Now, we're going to get into this. We're also going to talk about the state of this market, what's currently going on. I want to look at the inflows and the outflows to the NASDAQ, as well as some other key metrics like market breadth that you need to know. So hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Let's dive straight into it. If you guys also want to come trade with me live in real time, link down below in the description of this video. We're going to have some earnings trades for earnings here in after hours. There's some interesting companies: Zscaler, Broadcom, Lululemon, MongoDB, ChargePoint, Syntel One, Asana, Dell, Samsara, and Five Below that will be reporting earnings here in after hours. Nonetheless, let's get into this partnership. So like I said, you're not going to hear about this from financial media. I can't find one actual article on this, just little sub pieces. It says AMC Theaters On Demand migrates to Vudu. Quote, the movie theater chain will stop offering its AMC Theaters On Demand service, instead migrating users to Fandango's Vudu service. I'm not sure if I'm saying that right. AMC Entertainment will stop offering its on-demand movie service. AMC Theaters On Demand independently insisted incorporating the film TVOD library and migrating users to Fandango's Vudu under a new partnership announced Thursday. AMC launched its on-demand service in October 2019, debuting with about 2,000 movies that were available for purchase or rent by members of its AMC Stubs loyalty program. At the time, the movie theater chain said it had more than 20 million Stubs households. Initially, the service was available through the AMC Theaters mobile app, online, Roku, and smart TVs. Vudu owner Fandango, meanwhile, is a unit of NBC Universal with Warner Bros. Discovery holding a minority stake. Fandango acquired Vudu from Walmart in April 2020 and later merged the service with Fandango Now. In addition to movies and films available for rent, Vudu also offers thousands of free titles. The service is available in 75 million U.S. households and accounts for more than 60 million registered users. It says AMC Theaters On Demand users can transfer their account to Vudu along with their existing library of previously purchased movies. I find this kind of interesting. Because Vudu is a free service. So they make money primarily by advertising. They do make money by selling movies and renting movies as well. But a main portion of their revenue is going to be through advertising. Now, how does AMC get paid out from that? I think is interesting, because it could be much larger than what they were previously getting. Super hard to tell. but the stock is liking this news here today, up almost 3%. Now, if we go ahead and take a look at what's actually happening here on the day with AMC, take a look at the short interest. 21.5%. Free flow out on loan 35%. 501 million shares currently sold short. Short score of 91. Days to cover 6.82. Cost to borrow 56.5% and 100% share utilization. Cost to borrow fees. Cost to borrow average at about 76%. Cost to borrow max at 100%. Cost to borrow minimum at 50%. Interactive Brokers has a 65% cost to borrow fee currently on AMC stock. Now, what's going on currently with AMC? We know there's been a lot of synthetic shorting. We understand that. But when you think about what's going to be happening next with AMC, GME earnings, that's really going to be a big key to this puzzle, this next puzzle piece, I guess, to get laid down, as well as the next court date. These are the next two catalysts. GME will report earnings next week, I believe on Wednesday, and we should be getting a update from the courts literally any time now. So based off what happens with these two things, you have a potential to see tens of millions of shares get bought back by the market makers relatively soon. So as far as trading this, never a recommendation. Buy, sell, hold, flip, whatever you guys want to. I'm not going to tell you what to do. I'm not a financial advisor. But it looks like over the next couple of months here, it should be more green than not. After all, you've been falling pretty consistently with AMC stock. This is actually the first green day in a while. And if you look at the weekly chart for AMC, you have seen 4 red weeks in a row. If tomorrow is green, then this might not be a red week. You're only red by 0.22%. So hopefully we can start a little bit of a reversal trend here, because you were looking very good until the synthetic shorting started to happen. You were looking like a continued breakout was coming. But then hedge funds decided to buy a bunch of deep in the money puts, trades worth millions of dollars every single day, and artificially push down AMC stock. Now, these market makers, if AMC does rally from now until the large expirations, from now until June 16th or July 21st, that's where you could see millions of shares be bought back by the market makers. If that does not happen, then this reverse gamma squeeze is not going to reverse itself, because after those expirations, there's no longer going to be the need to buy back tens of millions of shares. So I think between now and these next expirations is really when I would be watching for that upside move. Now, in the broad markets, now that the debt ceiling is done, inflation, the Fed, data, recession, those are going to be the key words over the next couple of months. Now, what's interesting about this market is global markets are actually doing very poorly. European stocks just hit a low of about 8 weeks, so about 2 months, a 2-month low last night. China is now in a bear market. The other indexes really are not doing as well also. Besides Japan. Japan, out of all places, is looking to approach a new all-time high that you have not seen since the 90s in Japan. Yeah, imagine that. The Japanese stock market peaked in the 90s and has never returned back. Well, it's trying here in 2023, as well as America. America's markets are also very bullish. Rest of the world, not so much. So you're really seeing a mix match here, a real divergence, which shows you that something's weird. because America, the rest of the world, it's not going to be too far off. It's not going to be too far different. If China's hitting these new lows, but they're still growing GDP at an expected 3 to 5% in 2023, what kind of sense does that make? We'll see what ultimately happens there. But OPEC, that's going to be another big catalyst for this market. The Saudi Arabian energy minister literally told people to watch out about shorting oil. They've had a vendetta against shorts and shorting oil for the last 3 to 6 months now. They've threatened to cut production. They did it once, but it wasn't that big. It really didn't have a huge effect on the price of oil. Well, now they're threatening to do this again. The next OPEC meeting is going to be this Sunday. And if they cut oil production by a lot, well, that's going to drive the price of oil up. That's going to drive inflation up, or at least inflation expectations to go up a lot more as well. And you've already started to see an uptick there. But if they continue to go higher, definitely not going to be good at all, right? You've already seen PCE, you've already seen CPI and core CPI coming in hotter than expectations. The last thing you need is oil to also go higher. So definitely be on the lookout for that one. Now, if we take a look at the NASDAQ here, and now why I'm going through all of these things is because really the last domino we need to fall to getting a short squeeze is just hedge funds having less money, less collateral available. And 2022 is not a good year for hedge funds. Hedge funds saw $125 billion worth of outflows in 2022. This was the worst year since 2008. It was terrible. Everyone was pulling money out of hedge funds. Absolutely terrible. So they have a lot less to work with now. And even just equity hedge funds in Q1 of 2023 only seen inflows of $3.3 billion. Like, it's not a lot that's actually coming back. A lot of money is going to money market funds, playing in treasuries because yields are now 5+%. So that is something to think about as well when we're talking about a collateral, potential collateral crisis that could come, or shorts covering, because big tech ultimately does come down. Now, if we take a look at the inflows and outflows in the NASDAQ has been basically going parabolic. It's up like 15% in the last 2 months. But when you look at the inflows and outflows, it doesn't look that good. Now, out of the last 10 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, call it, you have seen 4 positive inflow weeks and 8 outflow weeks. It's not really the best sign. Now, here this week, this was actually flat yesterday. So it looks like you got about 1.2 billion of inflows here today. We'll see what happens tomorrow. These bars can move around a lot if you do see, rallies or drops in a day. So we'll ultimately have to wait and see what happens tomorrow with the economic data that we're going to be coming out. But from right now, this doesn't make me that bullish, right? And if you add up the net inflows to outflows, you're actually slightly positive, just slightly. And if we don't look at that, this 1.2 billion this week, you'd actually be slightly negative for outflows, right? There would have been more outflows in the NASDAQ than inflows. But the price of NASDAQ stocks can go higher, especially when the money's being concentrated into big tech, and big tech really controls the broad indexes. So pretty worrisome, I guess you could say, what we're seeing right there. On top of that, the next thing that I really want you guys to watch out for, I don't expect this to be a problem, but it could become a problem. It's the wave of the Rona in China. People are expecting by June you're going to see 65 million cases a day. Does China lock down again? Well, I'm sure if you get to those extreme levels, probably. That would be half of all of the cases, more than half of all of the cases that you've seen in America in 2 years, right? That's half in a week. That's what they're forecasting. So I'm not going to sit here and make assumptions, but it's possible that they do lock down, and that could be a negative thing for the broad markets, and not to mention if, hopefully that, doesn't spread from there. So just a couple key things that I am watching for. The next big data release is going to be tomorrow. You're going to get the unemployment rate. You're expecting 3.5%. Current unemployment rate is 3.4%. If that goes too high, going to be negative. If it comes in line, that's probably your best case scenario. If it drops, that's also going to be negative. The non-farm payroll report, you're expecting 180,000 net job ads. Last month was about 253,000. So if you get more than, call it 250,000, it's going to be very negative. If you get less than 100,000, that's probably going to be pretty negative. So those are some of the biggest catalysts we have. The next inflation report as well is going to be June 13th, and that is also going to be a big one, guys. So there you have it. If these catalysts do turn into be negative things, well, collateral could get squeezed pretty quickly because the average stock has already crashed. If you do see, big tech crash, big tech come down at all, it's going to put a lot of pressure on shorts. I don't think you have to see this at this point to get a short squeeze in AMC, but it would help create a little bit of urgency to cover on a short position, especially if AMC stock did buck the broad market trend and actually go higher, which you do see a lot. AMC inverse the markets there, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.